So Russian production so far, Russian production and exports have held up much better than expected. A lot of as you said initially, the price cap on crude oil that came in December has allowed the rerouting of a lot of the crude that previously went to Europe to new markets in Asia, and for that trade to use EU maritime services. So that helped facilitate some of the reallocation of trade. We're seeing exports, Russian crude oil exports to Europe, really come down by another 400,000 barrels a day in January after this price cap came through. Some oil still flowing through the Druzhba line and some to Bulgaria, both these exempt from the embargo. And so we're seeing the China, India, Turkey really picking up their purchases, but we haven't really seen other major buyers come into this market. And as for products, from 5th of February, the price cap on oil products came into effect. And so EU will embargo products as well. And here, so we're seeing now some reallocation of trade of the products, but we haven't seen the same shift as we saw for crude, which is why we're expecting Russian exports to fall and production to fall. This 500,000 barrels a day cut that was announced by Russia recently, it's in line with what we were expecting already. This is included in our balances that still see the markets relatively well supplied through the first half of the year. So we're not so concerned about this decline. We think there's enough supply to meet demand for the coming months. The question will be when summer comes around, refinery activity picks up to meet summer driving and China rebound really takes off. This is when we can see the market tighten really through the rest of the year.
I guess one way to phrase it, and I'm not going to ask you this question directly, is that in a sense the oil price cap isn't really working because oil production out of Russia is still pretty high and they're managing to divert a lot of their flows, to your point, to China, India and Turkey. One other dynamic I just want to ask you about is the U.S. And we've heard recently of the U.S. looking to release more of the reserves out of the strategic petroleum reserve. What is your expectation for supply coming out of the U.S. in 2023?
Thank you for that question. I just want to go back to your previous comment on the price cap. So we say that you say that the price cap is not working. I think we have a slightly different view because the price cap was put in place to allow for Russian oil to continue to flow to market, but at the same time reducing Russian revenues. And what we have seen, and even though Russian production is coming to market, we're seeing that the revenues that Russia receives from its oil and gas has really come down. For instance, in January, export revenues for Russia were about 13 billion US dollars. That's down 36% on a year ago. Russian fiscal receipts from oil industry is down 48% in a year. So in that sense, we can say that the price cap is having its intended effect. It is allowing oil to continue to flow to markets, but it's capping the price that Russia is getting for its crude. Urals prices are now trading around $46, $47, and Brent is above 83. So in a sense, it's having its intended effect.